Let's bring in Alan Nuckman, joining me, the Chief Market Strategist at BullseyeOption.com. Alan, what's up?
Morning.
I know you're a bull, you're hopeful, but you're trading Schlumberger. Isn't that the stock of a bear?
No way.
Energy prices. The market hates it.
Well, that's why I like it. So let's talk about this. Stock strength has simply slowed after an absolute straight-up move. So you look at the S&P and the NASDAQ, they rallied nearly 20% off their lows in just 2 months. The VIX went from 35 all the way down to 20. So we're seeing a little bit of recalibrating, a little profit taking, I think here. But my thought is that oil's not dead yet. Oil's been trading mostly between 110 and 90 for the last 3 months. Now we're a little bit below it. So from a risk-reward standpoint, Schlumberger is a nice play. It's stuck here between 32 and 38 now for the last month, coiling and consolidating for a breakout. It's 25% off the high, and 40 is the midpoint of this drop from 50 down to 30. So there's a gap at 40. There's a gap at 46. There's a lot of technicals that are positive here to be a bull buyer at these levels.
Okay. Energy prices, then, you've got to view them as being constructive at least. There's no way you're bearish oil if you're buying Schlumberger, right?
Right. And again, I think we're at the low end of the range. I think the price potential pop is for the upside when we talk about crude oil. There's so many things that could get it on the move once again. You talked a little bit with Ben about the dollar. My thoughts are that the dollar got limited upside with the fact that the Fed's so far showing us they're not going to get involved as we get in these further out years as far as raising rates. Rates actually decline when we get out to 23, 24, and 25. So that thought can put a little bit of a bull base under the energy complex here. So the way I'm looking to play, again, a limited risk positioning, putting a chip down, a January option for Schlumberger, looking at the 30 call, which is down at that low end that we've seen in a long time. $30 call for January, 5 months of time, deep in the money. That stock's at about 36.5 right now. That option's at about 8. So the expiration break even is $1.50 higher. And again, this is a stock that could very well get on the move if and when we see a turn here in the energy sector.
Okay. All right. Nice trade. So buy some calls, let Schlumberger go up and ride the wave. Maybe even a stock hedge a little bit if you're long the overall market, right? If stocks don't like crude going up, but Schlumberger does.
Right. And the fact is that if, oil prices do go back up, that could temper stocks once again a little bit more. So, there is a little bit of interplay. And for me, a lot of the easy money has already been made in some of these, stocks that bottomed out in tech and here in the S&P. So it's much more difficult here. This 4,200 level in the S&P is critical. We talked about this over and over and over again, how important it was that we get back to those June highs. We've done that. Now that was a ceiling, now that has to hold as a support base on a weekly basis. And it's also the halfway point of the drop from the top in the S&P. So 4,200 is very, interesting. We've got to watch and see how the markets behave here over the next coming weeks and see what happens with this level, because that's going to give us a look into the future, obviously.
Okay. All right. Nice, Alan. Thanks. Makes sense. Like the way you're trading it based on the view, and works well for someone who's long stocks, needs a little hedge against the energy inflation devil right now. Okay. Thank you, Alan, Chief Market Strategist at BullseyeOption.com. When we come back, let's take